Hello, and thank you for joining us for the second of 4 in a series of panel discussions related to the Spark Sioux Falls program meant to help bolster our community as we attempt to reopen and recover from the COVID-19 pandemic. If you missed this last week, it was a great discussion involving the food, manufacturing, energy sectors. You can find that on the Sioux Falls Development Foundation's YouTube channel. And I am sure we are in for an equally interesting discussion today. We've got a fantastic lineup of panelists representing largely the development, financial services, real estate sectors. They've got a lot to say about their own companies and as well what they are seeing and hearing in our broader business community. So with that, I'm going to move through. I will introduce them as we go here and as we begin to bring them into the conversation. Panelists, there's no science to this. I call on whoever's face appears first in my screen. And Mark Mickelson, you're the lucky one today, who's going to be first up. Mark, of course, the founder and president of Mickelson and Company. I'm going to ask you all the same first question as we go through this, which is to give me a sense of what the last 3 months have been like for you, for your business. How have things changed? What are some of the highs? What are some of the lows? So Mark, I will begin with you. Good morning.
Good morning, Jody. And yeah, thank you for having me. Our business provides a financing service primarily in the rail industry. And the pandemic has not really disrupted our core business. It has impacted some of our visits, our client visits, and it has also impacted modestly some of our growth initiatives. But we have a small office, 4 people, 5 people here. And I would say for the most part, business continues to be very good. Some uncertainty out there with our customers. Our customers are short line railroads, several hundred of them, and the industry is down about 20% in car loads. You know, if you exclude agriculture and you exclude coal, our volumes are down 20%, which just tells you what's going on in the industrial economy. Interestingly, Mickelson and Company is a partner in A1 Development, another small business started by a couple South Dakota farm kids that promotes and permits value-added ag facilities, kind of hog barns and dairies. And the hog barn growth has been slowed, but it has not stopped. The folks that we're working with are still interested in adding hog barns. With everything at Smithfield that you've seen, there's been some uncertainty, but I think that bodes well for the long term. And then the dairy piece of this with what AgriPure's expansion up in Lake Norden, it's as busy as it's ever been. People are still making fairly significant investments.
Good. That's good to hear as far as the ag economy goes. And we'll come back to you to talk further about what you're hearing from your clients out there. I'll now move on to Stacy Erdmann. Stacy is a partner and CPA at Eide. I know she's back in the office now. There's been a lot of transitioning over there, as there have been for many of our professional services businesses. So Stacy, this hit right in the heart of tax season for you, which I'm sure caused life to change a little bit. But talk us through what the last 3 months have been like at Eide.
If you would have told me that we would move all of our employees remotely, you are crazy, just because that's the heart of our season from tax and audit. Our IT people had a lot of work to do. There was items that we weren't ready for when we transitioned to remote working, but once we went to that remote environment, we did learn that and how our clients want us to interact with them, and we could do a lot more things electronically than what maybe we thought in the past. But the other kicker for us was really when PPP and EIDL and the CARES Act came into play. We kind of had to was definitely more important to our clients than completed and done. So there was a little bit of trying to make sure important to our clients while trying to get some of our other items done. I would say that the downfall for us was we did have some employees that can't do their job remotely, so we did have that would be the low point for our group. The high point was definitely that we really bonded together as a group, and we have office locations throughout the country, and we were able to help each other out. So we did learn to work across locations.
Are there any things, Stacy, that you took away? We like to ask this, that might be valuable for anything that worked especially well that could be valuable to others?
So one item that we did was town. So our CEO got together and on a weekly basis was filling us in on what was going on so that everybody knew exactly where we were in the COVID process, what we were planning to do, and there were no surprises from that standpoint. We also implemented a CRM, and we used that to be able to make sure that we were communicating when we were talking to our clients about the CARES Act and some of those different items so that everybody was kind of up to speed. And that really helped keep everybody together.
Was that new too, or was that an existing CRM that you were able to repurpose?
It was new as of August, so we had some learning on that as well. But when you have to use it, you get really good at it a lot faster.
Yes, I learned that as well. Okay, Randy Knecht, I'll bring in next, CEO of Journey Group Companies. Also saw a lot of change, continues to see some interesting activity related to COVID. So Randy, walk us through, spring, obviously always a busy time in your world, very different this year. What are some of the highs? What are some of the lows? What are some of the takeaways at Journey?
Sure. Well, first of all, thanks for the invitation to be part of the discussion. It's an honor to be with this great group of leaders. We're in the building industry and serve primarily the non-residential building and heavy civil construction markets on a regional basis here in South Dakota and the surrounding 5 states. We've got anywhere from 250 to 300 employees typically in a year, and got our start at Sioux Falls Construction in 1910, but still have a significant amount of our work right here in Sioux Falls. I would say, although we are classified as a critical infrastructure workforce, which was good for us, it meant we didn't have to shut down. We were able to keep our construction operations going. We did close our office for 6 weeks and had those management and admin functions being done remotely. So we came, like everybody, we came really proficient on Microsoft Teams and Zoom. So I would say some of the highs that we had was I was really proud of our leadership team, how we came together. When this first kicked off, even though we were able to work and keep it going, we were really concerned about how do we keep our employees safe. And so we worked hard at establishing policies and protocols for safe work practices. And thankfully, out of our 300 employees, we only had a handful that really contracted the virus, and half of that handful came from secondary exposure. So, and on a typical site, we sometimes we're a small representation of all the contractors that are on site. Out at Jefferson, we had about 300 employees working on that site at one time, and thankfully, it stayed safe. We were able to stay productive. But what we did learn was that although we can be productive working from home on those management and administrative functions, we're social creatures, and our team was really happy to be back in the office. And we've been back now since about Memorial Day. And I think that's one thing that we really learned is you can be productive, but in terms of keeping your culture healthy, it's everybody was glad to be back in the office. As far as lows, I would say we had planned for a really strong year this year, one of the strongest years in our history, and we've had probably 3 to 5 large projects that have been delayed, projects that were supposed to start this spring, summer that have been put on hold. And many of those have been delayed for almost a year. So that certainly has put some holes in our schedule. I would say, how are we doing today? Our industry really kind of lags the broader economy. So most contractors were busy when the pandemic hit, and they were able to, because of the critical infrastructure workforce classification, they're able to continue to work through it. And the good weather we've had this spring, most contractors were very productive and are really, even as of now, I would say, doing pretty well. But our pain is going to come a little bit later. We're going to slow down as people start working through their backlog, and projects that were scheduled to start are going to get a later start. So, it'll be interesting to see how the rest of this year shakes out and the beginning of 2021 as well.
I was in Randy's office this week for the first time since COVID, and it feels different. I mean, I was very intentionally, I think, thought out when you brought those workers back. Signage everywhere, sanitizer everywhere. Are there any things modifications that you made just simple to the office that you think might be useful for others to hear?
Yeah, we still are, we're not fully phased in yet. We still are limiting the number of people in our conference rooms. Our central hub and kitchen areas are still closed off, those high touch areas. Yeah, we were pretty thoughtful about how we brought people back. And although people were eager to get back, they were also a little hesitant too. So we encouraged the use of masks and the social distancing. And we're slowly starting to see people relax that a little bit. Don't really see much use of masks anymore, at least in the workplace. And so people, I think, are starting to get a little bit more comfortable.
Mm-hmm. Okay, I'm going to bring in Michael Bender now, the founder of Bender Companies. And I'm sure many of you, like me, tuned in to the annual Bender Market Outlook in February. And when Michael gave his opening comments, he suggested that we were entering what he called the decade of disruption. So next time you need to know, investment strategy, anything like that, you got to tune into to Michael, because he's obviously got a pulse on things. I don't know if this is what you meant, but I've sure thought of it a lot, Michael, the decade of disruption.
Well, I've been asked that now a number of times, and people, I didn't say decade of destruction. I said disruption. So it's been very disruptive, that's for sure. So yeah, so we're, Bender Companies is really three entities. We're all very forward-looking. We're a leading indicator of the economy. Most people do know us as Bender Commercial, which is our commercial real estate group with 14 licensed commercial agents. And then we have a very small residential group, Bender Realtors, which is also forward-looking and a leading indicator. And then our biggest entity is Bender Midwest Properties, and that's our property management group, which is a full-service group, both residential and commercial. We've got about 1,400 apartment units and about a dozen or so commercial buildings. And that's the area that I want to focus on. On the brokerage side, we're doing okay. We're seeing transactions. It's mostly industrial-based. We're not seeing a lot of office and retail leasing. But on the property management side, if you'll recall, back in March, everybody predicted probably a 25 to 30% credit default ratio for apartment tenants. And so we were bearing down, thinking we were going to have very significant credit issues with our residents. So we created a number of payment plans and programs for them. We also were active in steering them towards the One Sioux Falls Fund, which I know First Premier, the City of Sioux Falls, a number of people got behind and funded. And so as a result, I can tell you how pleased I am that our credit issues were almost identical to 2019. They were 1 to 3% in credit loss. That was it on the residential side. The downside was that our commercial portfolio saw about 3 times that in credit loss. And what we're seeing is the mom and pop tenants are having a much harder time paying their rent than a residential tenant. So surprisingly, it really was the reverse of what everybody anticipated on the front end. And I think some of the payment plans helped. We still are working through some payments, some rental payments with some residents, but we've not had any evictions at all and don't anticipate having any. And, between the PPP program, One Sioux Falls, I really think you can just say Sioux Falls is stronger together than they are. And that was just a real surprise. But leading indicators, certainly on the brokerage side, residential's very strong. We're seeing a lot of interest. Interest rates have a lot to do with that. But we're also seeing a lot of interest on the industrial land side, and that's been relatively strong as well. So So that's just a quick wrap up of our world.
That's interesting on the mom and pop commercial tenants. I would have thought maybe PPP would help, but was it just not enough? Is that what you're hearing, for them to both manage their payroll as well as their rent?
Yeah, I think that's what it is. There's a combination there of payroll, and I think they were focused more on payroll than they were on rent, although there is a provision for rent. They, as you know, they finally adjusted that and lowered the dollar or the percentage amount, so that now you can spend 40% on non-payroll issues instead of 25. So that probably will help. But there is a hole there that got dug in March, April, and May from a number of tenants. So it'll be interesting to see kind of how we come out of that.
Yeah, it will. Okay, great. We'll come back to you, of course. And finally, very happy to bring in Dana Dykhouse, the CEO of First Premier Bank. Terrific pulse on the community as well as the banking industry. And I'll start with just First Premier itself. Dana, obviously a lot of activity, a lot of changes. What have your last few months been like?
Yeah, well, it's been hectic to say the least, and kind of a crazy bag of things. First, thanks for letting me join this panel this morning. A great group of friends and people who truly have their thumb on the business community. First Premier Bank is in a lot of different businesses, and I'll just give you a thumbnail sketch of all of those. First, our credit card business nationwide. We have about 3.5 million customers and are seeing dramatic pay downs in their credit card balances. I think people are very protective of what they have available for credit, and so they're getting very conservative. Unprecedented amount of pay down, which is good for the future. They'll have that that credit available in the future. No real delinquencies at all. It's all stayed the same on delinquencies, which is real solid. But remember, the between the enhanced unemployment and the COVID payments, most consumers, as Michael said with his residential people, are in pretty good shape right now. We'll see if there's a lag effect after that. We're in the ATM business. We provide cash for ATMs nationwide. That immediately dropped 40% across the country. A lot of hotels, we provide ATMs, mobile ATMs for a lot of the festivals that have been canceled, so that dropped 40%. The biggest surprise for us is that we have about 120 dealers in the upper Midwest, 5-state area of boats and campers, and that business is up 156%. They are running out of inventory. I have never seen so many boats and campers being sold. And when we asked dealers what's going on, they said, well, story after story of a family who had been saving for 3 years to take the whole family to Disney World, doesn't know if that's ever going to happen, so they're going to buy a boat or camper. Or the kids have nothing to do this summer. There's no activities, there's nothing, so we're buying a boat or camper. So that business is up dramatically. Our home mortgage business is setting records each month. Refinancing of existing loans, along with a real vibrant in Sioux Falls residential mortgage market, just continues to plug right along. Kind of surprising that that's there, but it's been a really, really good year that way. Businesses, you have to come around to the PPP program, a program that was rolled out in weeks. And South Dakota bankers as a whole did a great job. I don't know how many of you may have seen that map, but they did a percentage of payroll for 2.5 months that was covered by PPP loans. South Dakota, along with the Midwest, was absolute high. I think South Dakota was 73% of all payrolls covered with PPP loans. California was at 14%. We might ask, why did that happen? And I think it's a good old Midwestern work ethic. We found out that the best times to get those PPP loans through the portal was on Saturday and Sunday nights between 2:30 a.m. and 5:30 a.m. Our bankers were working 24 hours a day over the weekend, sending those PPP loans to the SBA through those portals that got clogged up during the day. And I just think that our Midwestern bankers across the board did a terrific job to get those out there. Now, the challenges will be PPP loans, the forgiveness part of that, they're still writing the rules on. And one of the good things, as was said, is that many of those rules are being rewritten in favor of the small businesses. So we're pretty optimistic that that's going to continue, but the next few months will be interesting that way. So it's been quite a ride in the banking industry, of both ups and downs. You asked about one good thing of our own business. We sent about a third of our people home to work from home. It's easy to say, well, send everybody home, until you try to get connectivity in some of our rural areas where we're kind of all up and down the eastern side of the state, and that just wasn't possible. And so about a third went home. About half of those that have been home can't wait to get back in the office because they're tired of being at home. As Randy said, I think we're social animals and people want to get back. There's a group of people that just say this working at home has worked out very well, and they may just continue that. So kind of some interesting times. The best thing that we did, I would say, the first 2 or 3 weeks of COVID-19, many people were in a panic mode. We have 2,500 people. We were all going to die from it. I mean, that was the panic that was going on, and that has kind of settled down. One thing that worked for us is I've got to give a shout out to Allison Shuttle, who is a chief medical officer for Sanford Health. She was on a meeting like this every week to give us advice. She was a very calming, direct medical advice, helped, I think, calm our work staff and give us direction on what to do versus what was going on out in social media and that panic. So it's kind of settled down now. I'm sure for everybody, our footing, and pretty optimistic going forward.
Yeah. Okay. Fantastic overview. Thanks so much, Dana. This week, I think in particular, represented a bit of a pivotal. We were hearing that you were back to the office on June 15th. I know that continues a phased return for a lot of you. We put a story up just late yesterday over at Sioux Falls Business if you want to check that out. So very good information from everybody. We're going to go back through the panelists now. We've talked about their businesses. Now we're going to talk about their customer bases, their clients, and what they've been seeing and hearing from them. That's what makes all of these panelists a bit more unique. They're very out. I will go back to Mark Mickelson now, Mickelson and Company. Mark, what are you seeing? What are you hearing? Some broader themes that our business community through the recovery.
Thank you, Jody. Well, as I touched on in my, the railroads is our core customer base. The industrial economy is down about 20% in volumes if you just measure carloads. That would exclude grain shipments, which you would expect. So they are, kind of pulling back, most of them, just not being as aggressive. There are a few out there. Most of our customers are small businesses. A couple are in the process of trying to buy a business or trying to sell their business, and that's become quite a bit more difficult with the valuations and the debt markets, and just COVID has made that more difficult and put a lot of those processes kind of on pause. That said, those that kind of win are kind of entering this phase pretty aggressively, I think, looking for opportunities, and watch your customer bases and how they all react differently to a crisis versus hunker down mode versus get aggressive, and how their balance sheets are organized and the amount of debt that they carry is a pretty big factor in that. Relative to this region, as I mentioned, ag has been tough. It's going to continue to be tough in a down economy. But I think the dairy and the swine growth in this region will continue, not just this year, but kind of in the long term. We're seeing as much dairy growth as I think there's ever been that I've been aware of in Eastern. So that's what we're seeing from our customer base. As an aside, for about the last 6 months, I've been serving on the board of a company that's an it's an oil field services provider. And you can imagine the turmoil in that industry with the price of oil and that. But again, if people have organized their balance sheets appropriately, a down market can be a pretty good opportunity too.
Are you starting to see, Mark, any trending upward yet on the industrial side, or is it pretty much the same story as April and May?
I'm not, no, not as measured in it's public information, but you can go to the American Association Railroad. They do it every week. It's kind of down 20%. It has been, since the middle of March. So
Okay, thanks. We'll go back to Stacy now at Eide. Bailey works with a broad cross section of industries through its client base. So I'm sure you're getting many different perspectives, Stacy, but as far as what you are seeing and hearing from your clients that we maybe should be aware of.
I think the biggest thing is that they're having to adapt what they've done in the past. So some of these programs have helped them get through the short term, but as they're getting back into their working environment, they're not at full capacity again. So what does that mean for their cash flow, and what does that mean for the long term? And so they're trying to balance how to budget out the rest of the year. Really, where do they think they're going to go in the future? A lot of them are experiencing increased costs for safety measures. So if you've got a dental office, now you've got a lot more equipment that they're wearing and using, as well as not being able to have as many patients as they normally would have in a given day, because there's increased sanitation done in between times. So it kind of messes with what their plan for when you can't have the same number of visits. The other thing that has been, as with all of us, is there's just the uncertainty of what's going to happen in the future. So lots of, making plans now, but also having a backup plan. So there's been a lot of discussions on, okay, this is our best scenario, but what does it look like if we have to do this again later in the year? What are our plans for that, and what can make it go better? We've also had a lot of discussion with cybersecurity, just because that's been something that a lot of our clients have started to branch into, because it's been a necessity out of this. And how do we make sure that that's a positive interaction for their clients, but also a safe interaction for them as well?
Are there any sectors, Stacy, that are standing out as being either particularly hard hit, or maybe some of the ones experiencing some gains because of all of this?
It's kind of fun when you get to talk to a client. We'd have some discussions and it was all negative because everybody was not being able to see their clients and stuff. But I had a home health care provider that has definitely been a plus for him, because this has been an industry that they need those services, and they've had more of that because you can't go into some of the facilities to get help with it. So those have definitely seen some gains. It's been mostly the ones that have had to be disrupted and closed for periods of time that have had the most concerns.
Sure, understandable. Now at Journey Group, also another business that works with a lot of different industries. As you said before, Randy, some of those significant building projects were put on hold, hopefully just until later this year or early next. But what are you experiencing as you work across these different industries in terms of who's confident enough to keep building, who's pulling back? What are some of the themes more broadly that you think we should know about?
Yeah, sure. So we have a pretty heavy representation in healthcare and higher ed in those segments. And so both of those have seen significant headwinds. And, healthcare, we're basically forced to stop doing elective procedures during this crisis. And so their revenues and margins were down significantly for 6 to 8 weeks. And so that they need to get those elective procedures started back up again in order to restore their balance sheet strength before they're probably going to do CapEx spending. So kind of what we're seeing is, those elective procedures are starting back up again, but probably aren't happening as quickly as maybe was expected. That people are still a little bit cautious coming back. They're a little bit slow coming back. So we need to see that happen, certainly. Higher ed is a market that we're just really not sure what's going to happen there yet. Will classes be held in person, or are they going to continue to be done virtually? And so that's a kind of a market segment that we see a lot of uncertainty around the future. Healthcare will bounce back in time, and so those projects will continue at some point in the future, whether it's later this year or early next year. And then the third segment I'll talk about is the heavy highways. So we do a lot of work on roads and bridges, and those projects have continued. There was funding in place at the time, and so all those projects that we had planned on started and have continued. I think the risk there is gas tax revenues were down because people weren't traveling, and so that gas tax revenue is what's needed to fund these projects. And then also a long-term funding program, highway bill, has been needed for quite some time. And so whether our legislators can get that done, get that funded, will be key for our long-term success on the highway side. But that segment has stood up for us and has been, and we see, continuing to be strong throughout this year.
Are there some sectors, Randy, looking forward, and we should maybe note too that there's been some smaller projects that actually are COVID related that I think are either being talked about or maybe starting to come through your door, whether it's a business deciding to replace the parking lot because it's not as busy this year, or making some minor modifications to a workplace itself to be a little bit more of a healthier setup. But bigger picture, larger projects, do you see some industries that might actually really do some retrofits or some expansions to try to limit the spread of disease going forward?
Yeah, this is a market that we had started looking at even before COVID hit, but just the food processing side of it. So I think that those industries were hit really hard with when the COVID went through those meat processing plants and had to shut down. So I think what you'll see is those plants look to more automation, maybe less reliance upon labor, and so that's an area that we're looking at very hard as a potential growth market segment for us going forward.
Interesting. Okay. I'm going to go back to Michael Bender. Lots we could talk about here because you work with many different clients across the commercial real estate span, and you can take this any direction you want, and I might follow up from here, but big picture, I guess, what have you been seeing and hearing from your clients?
Sure. Yeah, if I can, I kind of want to focus macro a little bit more than micro here. Couple things. According to the U.S. Chamber of Commerce, over 80% of all businesses have opened up now. We saw the jobs report 10 days ago, 2.5 million new jobs, when they were predicting another 7 million in losses. Wait till July 2nd. When you see the June jobs report, you're going to see a very phenomenal number again. So in essence, the recovery is on. So we need to just think about how that's going to recover. The one area that I think from a macro standpoint, from a national standpoint, that I think I want to focus on is office buildings. When you think about office buildings and the impact, so I'm very bullish on remote workforce. And if I'm bullish on that ability to remotely work, that means I'm very bearish, if you will, on the demand for future office space. I think you're going to see tenants on the office side be much more short-term in their leasing and in their thought process. I think you're going to see decisions about design focus more on human decisions, not on design decisions, if you will. So you're going to see a different type of space get developed, and as we see the recovery, I think we're gonna transition as to thinking about who should return to the workplace as opposed to how many people should return. I think we've made that shift now, and it's not just everybody returning to the workplace. I think you're going to start to see more who strategically needs to be there as opposed to everybody. And I think once we do that and we see that workplace reopen completely, I'll introduce to you a new phrase that you're going to see and hear more about, and that is called visible cleaning. You're going to see, instead of the janitorial staff clean at night and you walk in the next day and you don't see them, you're going to see the cleaning staff be there during the day. It's going to be very visible, because that's going to be reassuring to those employees that their space, their workspace, is clean. And so I just think you're going to see a transition in the way we office and the way we do business going forward. And I think we flipped the switch here with remote working. I don't think it's going to take over everything. I don't think it's going to be the death of office space, but I think we're going to see a real dramatic decrease in demand in our growth in office space. So that's one area that I think you'll see, and that's going to affect us, and certainly in the downtown core, in the suburban core, where we have a lot of office space. We'll see that. Elevators, again, is another example. How are we going to handle people in and out of elevators, for the next 6 months to a year if we don't really have a vaccine yet? So I just think through that, and you take it three levels ahead, and you'll see some different changes going forward. So.
Will you remind us, going into this, Michael, what the office sector looked like in terms of vacancy? Where were we sitting earlier?
Right, yeah. As of January of this year, there's about, there's about 10 million square feet of space in our market. Roughly 3 to 4 of that is at the downtown core, and the balance of the rest is in the suburban core. And the overall market vacancy was around 12%. The national average was around 14 or 15%. So we were well below the national average. Suburban was better. Suburban had more speculative space put on the market. So the downtown core was actually better this go around. We'll do an update to that survey in July to see whether it's changed. I don't think you'll see much change by July at all.
No, I mean, I'm just thinking even on the new construction side in office this year, very little speculative. It's hard for me to think of any, not that some maybe wasn't envisioned for this year, but nothing major.
Right, there's some users that still are looking to provide space for their employees, but you're not seeing developer-driven speculative space right now on the office side.
Right, okay, good thoughts. We'll come back to you for more, of course. And then back to Dana, who also hears from businesses all across the community, lots of different sectors. Dana, what are some of the highlights that you're seeing and hearing from your customer base?
Yeah, before that, just a key point on Michael's comment. We're in the process of building a new office building when this all happened. And I would just agree with him 100%. We went through the process of rethinking how that space will be used, because we found, or were forced into rethinking who's going to work in the office, who's going to work at home, who might work in joint space. So Michael, you're right on that. That's we're living that every day, thinking about new ways. Businesses will be a real mixed bag. I've heard from dine-in restaurants that while they're open, people are reluctant to come back. They're kind of slow to adjust to that, re-entering those various dining establishments. And so we've heard that. I would say, as Randy talked about, an example, one of my neighbors builds fire trucks. Well, he is real busy right now, but he says come the fourth quarter, there won't be any business at all, because who buys fire trucks? Municipalities, townships, and so forth. And anyone connected to, not unlike Randy said, with highways and parking lots and any of those public entities, probably won't be spending money or will be very cautious at it. Other parts of our industry, home building continues to go along in Sioux Falls as it has. Many of the others are strong, and ag is just kind of in a break-even holding pattern right now. While Mark was right that we're expanding in some of those vertically integrated areas, the overall production agriculture is just kind of flat right now. So it's really a mixed bag. It's going to be interesting to see how this all unfolds.
It for sure will. Okay.
We do have, just one comment, we do have a number of customers. I think of a couple in the restaurant business are having trouble getting their people back to work because the enhanced unemployment is actually paying them significantly more than they were earning on the job. And I know you've heard that anecdotally across the country, but I hear it from customers quite frequently that that is a problem. That's slowing things down, getting workers back to work because of that extra $600 a week plus the 300 plus they get from unemployment. Well, that's at almost a $50,000 level and annually, and a lot of people just say, I'm going to ride that out. So that's one of the challenges.
Yeah, I absolutely hear that from businesses too. And all you need to do, I think, is drive around and look at all those now hiring signs in front of a lot of businesses. They are looking for people. They were before all of this, and now they're absolutely looking for people. So good thoughts there. I'm going to kind of combine our last two questions and let you guys take this where you will, and maybe I'll follow up based on what you say. Typically we would ask, what can we as a business community do to support your particular business in the recovery? And I'd like you to address that, but then I'd also like you to look at what opportunities from a community standpoint, you're all very involved in the community, what opportunities exist for Sioux Falls, to not just survive this, but to position ourselves to really thrive and to be one of the winners as a community coming out of all of this. So Mark, you've worn lots of hats throughout your career, so I'll let you pick whichever one you'd like to wear on this, but how might we support your business in the recovery, and what broader opportunities do you see for Sioux Falls?
Remarkable place. Thanks to the leadership of a lot of the folks here on this call and many others, and really the folks that preceded all of us. And for me, kind of the hallmark of that has been kind of an optimistic, working together attitude combined with kind of just a business friendly environment. And so, pretty clearly we just need to continue that. And, to the extent that we've got some younger folks on the phone, most of us have been through a few down cycles before. We'll get through it. We always do. And, if you ever, as Warren Buffett says, the average middle class person today lives better than John Rockefeller lived in the early 1900s. That's what's happened to our standard of living. We need to remember that our, 2 or 3 generations back, our ancestors spent all of their time working for food and shelter. And so we're remarkably fortunate. I would say this, and this has been called a pandemic. Clearly it's a cause for grave concern. I often ask myself, what if the mortality rate was 10% or 20%? We'd have a real problem. And the world's been through that before too and come out okay. And so sometimes we just have to kind of hit the pause button and back up and start kind of doing some independent thinking for ourselves. And I think hallmark of folks in this part of the country is we're pretty good at doing that. And so as I've traveled around the various parts of the state that, we've got some business and social interests in, I see people shutting down that don't feel like they need the governor to tell them to do that. For instance, out in small town South Dakota, and I see the gym 2 blocks from my house that's kind of, it's do what you're comfortable doing. And so I think people have done a pretty good job adapting. And so thanks for having me on.
Absolutely. No, thanks for joining us and sharing your insights. Great to hear from you. We'll go back to Stacy now at Eide Bailey as far as what the business community can do to further support you. Obviously, you're a broader presence in the community. So what opportunities do you see for Sioux Falls coming out of this?
This is going to sound like a super selfish one, but just patience with us as we get to some of these extended tax filing deadlines. We wanted to do as much as we could as we got to those, but with working remotely, it maybe didn't go quite as smoothly as we had hoped on some of it. So just some patience as we get to some of those deadlines. But as a whole, the community has been fabulous, very willing to help us with what we've been doing, and we can't appreciate them any more than they've just been great. But I would also say, if you look at Sioux Falls, there's a lot of stuff that's happened in a year period. We've had floods, we've had tornadoes, now we've been dealing with a pandemic, and the city of Sioux Falls just rallies together and helps. I think that is really the core advantage of the community and why so many people want to live here. So I think we just need to have a continued effort amongst businesses and nonprofits to support the needs of the community as they come, and making sure that we're having our voices heard, but we're hearing everybody else's voices so that we can meet the demands that the community has. And I think if we work together, I think, as Mark said, we can get through anything.
Thanks again for joining us. Good luck with those
Thanks for having me.
deadlines. I know the work probably seems like it never ends over in your offices this year. So thanks for all you do. Thanks for being on the call. I'll go back now to Randy at Journey Group as far as what we as a business community could do to support you and your organization, and then what opportunities you see for the broader community to recover.
Sure. Well, just a big shout out to all the banks in Sioux Falls. The Paycheck Protection Program has been a great assistance to many organizations, including ours. And even though we haven't had to use it yet, we certainly expect that we're going to need it here as we work through the rest of this year and into early 2021. So, just echoing Dana's comment, our bankers they were there for us. They were there for us at nights and weekends, and worked extremely hard to make sure that we were able to get that loan in place. So a big thank you to the banks. I just think, echoing Mark's comments about living through a couple of these, the 2001 and the 2008-9 recessions, I don't think that we were hit near as hard as the rest of the country in either of those two recessions. I know our company certainly wasn't. And so hopefully that, that holds true here too. And I also think that the fundamentals were different in those two recessions than they were this time. I mean, we were economically very, very strong prior to the pandemic hitting. And so, some economists will tell you that's going to help us get out of this, that maybe it'll be more of a quicker recovery. And I know that remains to be seen, but I'm optimistic for that. And then I think as far as opportunities, for Bob and Mike, seeing Governor Noem and Mayor Tenhaken on some national news programs promoting South Dakota and the differences that we have here in our state where we didn't have to shut down. I think that can help us in terms of helping recruit people and businesses to South Dakota, that it can be viewed as a safer state to do business. It's a more pro-business climate. And again, I just think it's a great opportunity to promote Sioux Falls and South Dakota.
Yeah, that's a great point. Yeah, those are some of the advantages that I'm trying to draw out here. Anything else that you want to add before we wrap up?
No, I thank you for having me as a panelist today. I appreciate it.
No, great to have you on. I know you've been staying plenty busy anyway, though, so we will we'll definitely be updating some of those projects, as I know the larger community will want to see where some of those are at. I think, maybe continuing on with Randy's thought here as we go back to Michael at vendor companies, who I think is probably right that the notion of an office and who needs to be in an office is definitely going to be evolving, maybe pretty significantly. And if that's true, then that really means many people can live from a lot of different places, maybe even more so than they could today, which makes it incumbent on you to be the place with the lifestyle of choice, I would think. So I'm curious, Michael, if we start there, what opportunities do you see in Sioux Falls more broadly to position itself for success coming out of this?
Yeah, I do. I think you're going to see more and more relocations to a community like Sioux Falls and South Dakota in particular, because of what Randy alluded to with our governor and our mayor, highlighting some of our features that just you don't see in some other communities and states. And so you're going to see more and more remote working, and therefore people are going to choose where they want to live because their employers are letting them. We wrote a blog post about this and posted it about 3 weeks ago about Facebook, Google, all of those. They've done surveys, and they are very close to releasing a number of employees to be permanently just remote work, which means they can live anywhere. And so you're going to see that. And I think we're going to be a beneficiary of that because of what we represent here in our community. this will be my 5th recession in almost 40 years in commercial real estate. You got to remember, I had 2 of them in Texas before I moved here. And I'm telling all of my team here, the one of them in Texas, the S&L crisis and the oil and gas crisis was far more severe than what I've experienced up here. And we got through that. So I'm kind of like Randy. I think we can get through this. I'm very optimistic that by the 4th quarter, we're going to see a lot of pent-up demand. I don't think the summer is going to represent much. I think people are still too nervous, too cautious. But I think by the 4th quarter, we're going to see in our business a lot of interest and a lot of expansion going on. And so what we really service the business community. So what we can help the business community more than they can help us, so to speak. We can provide data, detailed information, advice on properties. And so I just think we're going to see a lot more demand than we feel right now because everybody's put a stop on stuff. And then the other thing I would say, and this sounds a little corny, if you will, but check in on people. I think this is a wonderful opportunity to get people that we all know and care about, but we're busy and we have more opportunities. And I think it's a time to just text or call somebody this week. I'm trying to do it 2-3 times a day to people that I just haven't talked to, even a text, and just say, hey, how's it going? What's going on? Tell me what your life's up to. And I know it sounds kind of corny, but I think that's what makes Sioux Falls so great is we have that ability to do that. It's small enough and we know each other well enough where we can do that. So I would say, we need to really protect each other so that we get through this together. So, and I want to thank everybody for the call, and thank you, Bob, for putting this together and showing leadership for getting everybody together and encouraging how we can all get through this together. So.
That's a great point, though, about checking in with people. I mean, it's nice for me to see all of you, people I haven't seen for a while, and I'm used to running into you, and we're just not living in such a way that happens anymore. So, yeah, terrific thoughts there. Thank you. And finally, I'll go back to Dana, who can speak with a lot of community hats, but I'll maybe ask specifically if you would pick up the workforce one, because Dana's played such a leadership role here in recent years as far as helping develop and attract and retain talent, whether it's through the tech schools, university system, professionally. Dana, what opportunities do you see for Sioux Falls coming out of this?
Yeah, I'm glad you brought that up, Jody, because that is one group that I'm worried about out there, is that we have in South Dakota a lot of recent graduates, college graduates, tech school graduates, high school graduates, kind of worried about their future. There's not a lot of hiring, and they're waiting for that perfect job. And if, like Michael said, check in with them, I'd encourage them just get a job. There's a lot out there. I guarantee you that I'm kind of a firm believer in that idea of first job. You need your first job. You need a job doing something. I guarantee, and if you ask this panel what their first job was, you might be surprised at what their first jobs were. But we all learn something from that first job. You all learn about how to interact. And I worry about these kids talking about, well, I'm just going to take a gap year. I'm just going to stay home. I'm going to wait until the ideal position comes open or they start hiring again. Just get out and get in the workplace, participate in the workforce, and you'll learn a lot and you'll grow. And as Michael said, as things open up later in the year, those jobs will create. But reach out to those young graduates, get them involved, because I worry about that group that's just kind of going to put everything on hold. And that's not very productive for themselves or for us as a community.
Yeah, good points. And do you agree that there are opportunities here for Sioux Falls to kind of sell itself as that location of choice, Dana, whether it's to an individual looking for a job, to a business looking for a location?
I really do. I think that, again, Sioux Falls and the just the character and the makeup of Sioux Falls really has shown through in these times compared to other places around the country, that this is a good place to locate. This is a good place to come to work. This is a good place to bring your business. And they've said often that the new workers will look, where can I work? Where do I want to live? And then what job can I have? And we look like a pretty attractive place to live right now and raise our families. And with more people working remotely, make Sioux Falls your destination.
Absolutely. Any other thoughts before we wrap it up? No? Okay. All right. Well, I want to thank you, Dana. Thank all of our panelists for being with us today. Another really terrific discussion. If you like what you've heard, if you'd maybe like to share that with a colleague, this conversation has been recorded. It's going to be shared on YouTube through the Development Foundation's YouTube channel. We'll also push it out through siouxfalls.business, and we're going to be reaching out to you after this as well. So you'll be getting a survey where you can share your input with us involving anything you've heard here or anything else you think might help the Spark Sioux Falls recovery. We've got 2 more of these to go. Next week, Tuesday, again, 9 a.m., we're going to be talking healthcare and hopefully a little retail. So I'm sure that will be another interesting conversation. Make sure and register for that one as well. In the meantime, thanks again, everybody, for joining us, and have a great rest of your day.
Thank you, Jody.
Thank you.
Thanks, Jody.
Bye-bye.
Bye-bye.
Thank you.
Have a good week.